To remain updated with the latest business news, click on the bell icon.
Hello and welcome. You're watching Business Today. I am Sakshi Batra. Well, if you've been wondering what's really going around with the taxation of cryptos, I have just the right person for you. Joining right in is a very, very special guest with me, Mr. L Badri Narayanan. He's the executive partner at Lakshmikumaran Sridharan. Welcome, sir, and thank you so much for taking out time for this discussion. How do you view the kind of taxation that has been put, 30% on cryptocurrencies and that 1% TDS, and what does it really mean?
I know. I mean, that's a very, very big question, but I'll try to answer as best as I can on this. So, as you know, for everyone to understand, the government is proposing a flat 30% tax on profits that you make from crypto assets. The losses that you make, you cannot carry forward. There's been a clarification yesterday relating to set-off. We'll talk about that in a minute. So, effectively, they want to tax this as a bespoke regime. It's going to be outside taxes on business income or taxes on capital gain. So they're keeping it out of both of these regimes. They've created a special crypto taxation regime within the very large Income Tax Act. And the thought process is to kind of keep that as a separate asset class and kind of not mix it with other asset classes. So losses in other asset classes cannot be set off against profits of this thing. And again, losses of crypto cannot be set off against other this thing. There's been a later classification, as you know, where they're saying that inter-se set off of losses and profits between virtual digital assets will also not be allowed. I'm not so sure that's the correct position of law, but that's definitely a position that the government is taking, and it's a plausible interpretation of the law.
So if we could simplify this a little further as to whether this means that if I own 1,000 bitcoins, I make profit on 500 of them and 500 I lose money on, I will not be able to set off.
That's correct. So let us say, for example, we have 1,000 bitcoins. 500 of them you were able to make a profit when you made the sale. 500 of them you made a loss when you made a sale. So ideally, for example, as a tax lawyer, you would say that you set off the losses against the profit and you pay zero tax or a very minimal tax, right? But now the government is saying that, heads I win, tails you lose. So effectively, they say that, on the 500 on which you made profit, we'll take the tax, 30% tax on that. And on the 500 that you lose, too bad. We're not going to allow you to take a deduction on that. So it's really going to, it's a disincentive of sorts for the retail investor to put money in this, especially if you're going to do short-term trading. So I think that's really the aim of the government, is to try and take it away from being very speculative, which it is currently with high volatility, and to kind of try and make it a little bit more mature. That's really the thought process, I think, on that.
Okay. So could you also help us understand, we've also been hearing that some of the policymakers have been talking about how there is a thought process going behind whether crypto should be brought under the GST ambit as well. How will that be different, if at all, comes into play?
So today there's a lot of confusion whether crypto is goods or services. Okay, there's no clear entry in the GST tariff with respect to goods, and also the judgment of Supreme Court in the IMAI judgment basically says it's got aspects of money, and as you know, money is not liable to GST at all. So what gets taxed in GST is these exchange fees, gas fees, other transaction fees which you kind of incur when you do these transactions. But today, people are not paying tax on the underlying GST, which is there, on the underlying transaction. The government wants to get its pie of share of that and want to say that the purchase and sale of cryptocurrency itself should be liable to GST, and that will change the whole dynamic of the underlying transaction. Today, for example, you pay taxes merely on the margin or on the fees that are there with respect to that. But tomorrow they want to tax the entire crypto itself.
Yeah, absolutely. So will that actually be equated to sin goods perhaps, because that is the highest bracket? And
I'm not sure they're going to tax it at 28%, which is the highest rate of tax for GST for sin goods. I think it's more likely going to be around 18%. Just like as normal goods and services. But we'll have to know only when the GST Council comes back to us with what they are planning to have. I don't think they're going to get it to 28%. I think it'll be more of an 18% kind of a bracket, which will cover it.
Okay. I wanted to also ask you, sir, how much is it possible for us to centralize crypto in India? It has already been decentralized outside. So if you could help us understand and break this down for all of you.
So two separate things, right? So for example, crypto was born in 2008, 2009 as kind of an answer to the central power that the banks had had in the US in the financial crisis and so on and so forth. The first papers were written around that. And so it was born decentralized. Okay, and one of the big features of cryptocurrency is the fact that it's not under any central authority. It's basically self-regulated through algorithms and a decentralized network, right?
Yeah, yeah.
In India, we want to kind of have the comfort of bringing some of that back into centralization. So the CBDC, which is the currency that we are trying to propose, is basically so they use the technology, which is decentralized technology of having registers across different blocks on the blockchain.
Yeah.
But ultimately, they want to give some kind of legitimacy to it by being under the aegis of a central authority. Okay, so that's really how they are planning to bring this under central authority. I don't think per se it's bad. I don't know how much there will be an uptake for something like this, and where are the applications which are going to be made for something like that. But I always felt that if cryptocurrency were to come into mainstream,
Yes.
there will be some level of centralization. To give you an example, if you have a stable coin, which is something that you issue for something which is like an underlying asset. So, for example, I could issue a stable coin for Reliance shares. Instead of there being shares in dematerialized form, I could have a Reliance coin, for example, or I could have a Tata Motors coin. Okay. And that will basically derive value from the underlying company shares as opposed to it being there. And those can be traded as tokens.
Right.
And as we move into a decentralized organizational world in Web 3.0, you're going to see more of those kind of things. And there you're going to have a central company with decentralized tokens. So I think the two will start marrying as we see things progress over the next few years.
That makes actually more sense because at least we can have the underlying value derived from something which has fundamentals as well.
Yeah.
Isn't it, sir?
Absolutely. I'm a bit worried about some of the cryptocurrencies because there's nothing underlying a cryptocurrency. It's merely a medium of exchange, a pure medium of exchange, which we're able to, instead of stating out that I'm going to give this in return for this, we're able to have a nice medium of exchange, just like money, to do that. And its value is derived from the demand and supply for such products. But I'm always very happy when there are utility coins and stable coins.
Yeah.
And I think the government will also look at those a little differently from pure crypto tokens.
Absolutely, and where you say that it is a medium of exchange, we have been seeing some instances in India how some restaurants were saying that okay, you can pay by bitcoins, but now because the government is now perhaps going more towards the asset aspect of cryptocurrencies, will that be still?
I think it's a very, very interesting question. Okay, I think today cryptocurrency is not legal tender.
Yeah.
What that means is that you cannot go into a shop and force that person to take this money for a settlement of payment for goods and services.
Yeah.
But I think in the it can still be tendered, and if somebody is willing to accept it, it can still be goods or services which can be bartered, right?
Okay.
I think those will still be on.
Okay, but I wanted to also ask you, will there be any tax on cryptos which are sold before April 1st?
Oh yes. So I think there are two views on that. Okay. My view has always been that cryptos are always an asset class. It's not money, but it's an asset class. Asset classes, when you purchase and sell, are liable to income tax. What I used to argue for many of them, that this is the nature of a capital asset. Purchase and sale of it is liable to capital gains tax, just like you pay taxes on shares and certificates.
Yeah.
But I think what's really happening with crypto is that a lot of people have felt that they will not need to pay any taxes because there is uncertainty with respect to the regime. I pretty much believe that that is there. What I do believe is that the tax regime prior to 1st April 2022 is a better regime than afterward, because I think the taxes go very steep after 1st April 2022.
So, what are you telling your clients who already have investments in cryptos?
I'm not saying anything. I'm at their instruction, not at their this thing. So I'm just giving the facts. The facts are, I think a lot of crypto investors, to be honest, are long-term players, and I don't think they're only playing for a few days or a few months. I think some of this will be real value when institutional money comes into crypto in a big way over the next few years. So I think many of the investors want to continue to keep it, and they'll ride it out. And I always feel that the government will always bring the most restrictive tax and then dilute it down, rather than bring a kind of a diluted tax and then kind of make it more restrictive. Always difficult to go from being tougher regime to a simpler regime. That's what the world and the history has repeated itself,
Yes,
right?
yes.
You always have a high rate of tax and you come down.
Yeah.
You don't go from a low rate of tax and make it up. It's never worked. So that's how I think. So I'm gung-ho that over the years, as things get more, we have more data,
Yeah.
we might actually have the regulators and the tax authorities
Well, the
change the
CBDT
regime.
chairman told me something otherwise on my channel, and he was like saying that 30% is perhaps not as much, and we could also go it, push it to higher. So we're just keeping our fingers crossed right there. Thank you so much,
Thank you
sir,
so
for this
much.
conversation and helping us with all the insights on the taxation bit on cryptos.
Thank you so much, Sakshi.
If you like the video, do like, comment, share and subscribe.